All right, guys, welcome to step number three. This is where I'm going to be explaining to you guys what options are and why we trade them on a regular basis. So, if you guys don't know what options are, they're very similar to stocks and they're connected to stocks, meaning an option contract derives its value from the price of the stock. So, if a stock price goes up, depending on what type of option you have, call or puts, which we'll go over, the option contract is going to move. And options move way faster than they do with stocks, and that is why we trade them. We're able to make a lot more money without having to put in as much money as you would for stocks to make the same amount of returns. So that is how options work. So the difference between a stock and an option is number one, stock represents an ownership in a company. But when you buy an option contract, you're not technically buying shares into a company. You're just buying an option to purchase shares in the future in the company. So you don't have any technical ownership, even if you buy an option. Second thing, stocks never expire. So once you buy shares into a company, you can hold them for forever. But options you cannot. All option contracts expire eventually, so you have to sell it before the expiration date. And whether you decide to execute the contract or not, it's totally dependent on what you want to do. But options do expire, so you want to sell them before. And then stocks, you have no leverage, but with options you do. Each option contract represents 100 shares, and therefore you're able to get a whole lot more leverage for trading options than you would with stocks. And then also an option contract, like I said, represents 100 shares. One contract does, whereas one stock just represents one. I mean, one share just represents one unit of the stock. And options are more riskier, but they do offer a whole lot more reward, right? More risk, more reward. But if you know how to trade them, you're able to make a whole lot of money. So, right. Options are financial instrument that allows the buyer or seller the opportunity to buy or sell an asset in a later day at a given price. Think of as a contract in which the value of the contract moves up or down as the stock moves up or down. However, a $1 move on the stock could be a $40 move in the value of the contract. This is why trading options can be very, very rewarding. This is an example of how you're able to buy option contracts on Robinhood. So you go to any stock, right? For example, Tesla, AMD, and you're just going to click on the button on the bottom right corner. And when you click that button, this is going to pop up. Once you have the options enabled, like I mentioned to do on step number one, once you have that enabled, you will have these two buttons, and you're not going to click buy because buy just means buying shares. You're going to click trade options, right? And once you click trade options, you're going to get this screen. This is what is called an option chain. And this is where you can buy all the contracts of options that this stock represents. So, for example, on Tesla, these are all the expiration dates, right? You know, the October 6th, October 13, October 20. So this is when the option contracts will expire for that chain. So if I click on October 13th, these are the option contracts that are available for October 13 expiration. And you're going to have two options, right? You're going to have call or puts. Call option contracts, you're going to make money when the stock goes up. Put option contract, you're going to make money if the stock goes down. So yes, you can make money if the stock goes down, and that is the great thing about trading options. You can make money either way. So therefore, you know, whether the stock market crashes or not, you'll still be able to make money. And that is how I'm able to make money, regardless of how the stock price is going to move, right? So let's say you want to buy a call option contract because you think Tesla is going to go up. You're going to choose out of any of these option call contracts. Now, you're going to get this area where it says share price, and this is basically the level of where the stock technically is right now. So at this moment, Tesla was at 259. So all the option contracts above 259 are is what is called um in the money. So out of the money. So everything above is something that the stock has not touched. So for example, the 260 call option contract, this is where the stock has not technically reached above 260. So this is out of the money. So all these contracts above are out of the money. And it basically just means the option call contract is not there yet. The price of the stock is not there yet to be in the money. Now everything below is in the money, and these contracts are going to be more expensive. So the more down you go, the more expensive, as you guys can see, the contracts are going to be. Now, this is the price of the contract right now, $7.50. Now, that does not mean that each contract is going to be worth $7.50. This just means that this is going to be per one share. So every option contract you buy, you need to understand you always times it by 100 because each contract represents 100 shares of a company. So $7 times 50 times 100 is $750. So each contract is going to cost you $750. So I hope that makes sense. But this is basically what an option call contract is. And like I said, there's two types of contracts. We have a call option and a put option. Call option, just remember you make money when the stock goes up. Put option, you make more money when the stock goes down. And then there's five things that make up the Greeks. I would ignore Vega and Rho, but you have delta, theta, and gamma. Delta represents the sensitivity of an option price to changes in the value of the underlying security. So however much the stock price moves up, the delta will move up, and that is how much the option contract's gonna move up with it. So for every dollar it increases, the delta will tell you how much the option contract is going to increase with it. Theta represents the time decay. So the closer a option gets to the expiration date, the more it loses in value. So you don't want to hold until it gets close to the expiration date because you will lose a lot of value on the premiums of the contracts. Gamma represents the change of delta relative to the change of the price of the underlying security. Just think of this as a booster to the price of the option contract because if delta starts moving, then the gamma will start moving, which will increase the option contract even more or decrease it even more. And Vega is about volatility, so how sensitive it is to volatility option contract is. And then Rho is how sensitive the option contract is to the interest rates that are currently happening. So Vega and Rho, I really don't pay attention to, but these three are important and it's something to keep an eye on. So whenever we signal, we have these three in the back of our heads, and we make a decision after looking at these three every time we trade. So here's an example of an option call that I bought a long time ago. This was on 2021, so about 2 years ago. So like I said, I have been doing this for a long time, guys. If you guys don't know, I've been trading options for almost 3.5 years now. So here's a trade I took a long time ago. I made around $655 on this trade, but the price of the stock, Amazon, only moved up 4%, I remember. But even though it only moved up 4% as the stock price, the option call contract moved up 60%. So this just shows you how much more money you can make by trading options instead of just a share of a stock. And I think I put around, so the average cost was $10.70. So again, times that by 100, right? So this was $1,070 per contract. I bought one of them, like you see here, and I made $655 in one day trading this option call contract. So very, very profitable if you know what you're doing. Also, you can lose money as well if you don't have the right guidance. But luckily, you guys are in the Bullseye option trading community, and we got you guys covered because you guys are gonna have direct access to my signals as well as other admin signals as well. So you guys are in good hands. But this is what options are. If you guys have any questions about options, feel free to ask us in the chat and we'll answer them for you.